I crashed. I can't guarantee that I won't crash again, but I crashed. Yeah. Content, and then I've got to go over here. Live. I'm probably going to lose a bunch of people who won't listen, but maybe you'll listen on the podcast. My apologies. Oh, I crashed. Okay. Chase, I am triggered by it. I don't think it's the i5. It could be the i5. But yeah, I mean, I get at some point in time, I'm going out and buying one of these, either the Mac Studio or the Mac Mini, like a souped up Mac Mini, because I don't think that the iMac, this is a 27-inch iMac. I have screen issues where I could get a larger screen. Morning, Aaron. In fact, I need to go over and redo this. Okay. But I don't have enough screen real estate, so I could do better with this and dual monitors if I hook up just a Mac Mini versus just the built-in one. But I do like the look of this. So I have to find something that looks good. And, yeah, and that's the problem with Mac. I mean, I'm all in on the ecosystem, so. Okay. I'm going to start recording again. My apologies. I crashed. So you're going to see a little break here, but we're going to go on to it. I was talking about inflation. So inflation was 1.3, inflation was 3%. The GDP was 1.3. What that means is that the economy is not growing fast enough to support inflation. So we need to get the GDP up and the inflation down. So with that said, I do think you will see a rate cut sooner than later. And we'll go over some of this stuff. But here's Josh Brown. Josh Brown puts on a masterclass. I would not be out racing to buy Apple right now. This is the most overbought we've seen Apple in a long time. Here's the chart of Apple. And this is what you want to see. The MACD, incredibly high. The RSI is coming off of levels at 82. And it's still, while it's projecting downwards at this point and having one of those button hooks, the Bollinger Bands is still trading above the Bollinger Bands. And today you're up at 0.14. Now, where's the resistance level? It's up here at 220. This was the high candle on June 12th in the afternoon. It's up here at 220. So if you buy at 213, you got to know the resistance is going to be 220. Where's the support? It's still 200. So you have less on the upside than you do on the downside. That means if we get past 220, you could dollar cost average your way in. But honestly, I wouldn't do it. And am I adding to Apple? No, I'm not. Am I holding my Apple? Yes. Am I getting rating of it? No. Josh Brown puts it really, really well here. I think it's 2 minutes and 35 seconds that you should listen to. Here, Gunjan. It's been 329 days since the S&P recorded a decline of 2% or more, the longest stretch since February 2018. We can go and look at VOO. That is an incredible, that takes us back before COVID. COVID was the greatest trading opportunity that you had, and we still haven't seen a pullback since 2018. This is the longest stretch we haven't seen that. And so you're seeing this bull run up, and you're seeing here, the algorithm got you in at $489. You're trading at $498. We're close to breaking 500 for the first time ever on VOO. It's trading at 498.46. So she's got a really good point there. You got to keep your eye on Twitter. Make sure that you follow some of these people. Now, the biggest movers of the day, we're talking AI. Now, Autodesk, shares rose 4%. This is an activist investor Starboard. That's great. Best Buy. I've been in Best Buy because I'm looking at new TVs. I don't like their model, but UBS raises it based on the fact that they think there's going to be a cycle of upgrade for appliances. It's an interesting one. Best Buy, if we take a look at it in the 4-hour algorithm here in TrendSpider, you can see after their earnings, they had a nice gap up. This was a huge gap up. I didn't believe in this one. I said maybe you just want to trade it. Well, it went from 72 to 78. Now, where are you on the weekly? You've got to take a look at this stuff, long-term and short-term. Your resistance level from this point is going to be 91. You're at $90.40. It makes no sense to buy into this thinking I'm going to buy in at 91 because I'm going to get all the way up here. You have to have your moving averages. Your 50-day finally starting to move positive. That's a good thing. You're trading on the outside of the Bollinger Bands. That's a bad thing. Your RSI is at 65. That's not a good thing if you want to buy it. Your MACD on the oscillator. So you've got to make sure that you understand these things in order to do that. How do you understand these things? Well, I'd argue go over here to the Education Center, just click on this, and all of these newsletters that I have in this Education Center, it explains everything. RSI, Bollinger Bands, PE, Golden Cross, everything. The MACD, it has everything that you need in that Education Center. But again, Best Buy, I'm a fan, just not sure I really want that one in now. Now, Broadcom gained 3%, extending its rally from the previous week, during which shares hit a record high. The semiconductor firm added 23% thanks to its better than expected Q2 revenues. Broadcom is one that I personally own, and I said, hey, I'm not sure that I would buy it into the earnings. The earnings and the 10-for-1 split, we got above that trading range that we talked about. Now, you've got a huge gap here between 1,500 and 1,655. Now, for the 10-for-1 stock split that happens later in July, that's going to bring it back to what NVIDIA just did. NVIDIA is still on its way up. NVIDIA, there is no reason for NVIDIA, we'll go over that in a little bit, but there's no reason for NVIDIA to continue to move the way that it is and gain a $4 trillion market cap. It's not going to do it. I mean, it just can't. It can't move that fast. Again, you're just as likely to go back to 80 as you are on 200 on NVIDIA. Broadcom, same kind of thing. It's a little bit extended. Just a little bit extended. If we go and look at Broadcom in the quant in Seeking Alpha Premium, you can see the valuation's a bit stretched. It's a hold in the quant. It's a hold in the quant. If we go and look at this, even the PEG ratio is a bit extended. I am looking to probably trim my Broadcom exposure. Now, I have this in brokerage. I will take a short-term hit for taxes. I want to add this into my retirement account. I'm going to play this one exactly the way I played SMCI last time, and I had these huge gains. Do I expect AVGO to continue this kind of like a SMCI? I don't. It's just not the same business, not the same kind of thing, but I do expect Broadcom to be a huge winner. Look at the RSI. The RSI right now is at 88. There is no reason to buy into this rally. There is a lot of reason just to sit on the sidelines and be patient. You can probably buy this in the 1500s or 150s after the split, but it's just a bit far too much too far. So now, talked about Apple a little bit with Josh Brown. Apple's breaking out into his favorite month of July. 100% win rate over the last 8 years. Average return, 8.23. 8.23%. I will tell you, I have a plan for Apple. I absolutely have a plan. Would I be buying into Apple with that kind of seasonality? I wouldn't. And the reason I wouldn't is because you're just as likely to go back to this 200 as you are to 250. The RSI is up here at 69. The MACD is up over the oscillator. It looks like it might have to cross down in order to continue. You just had this bull cross. Now, if you just played the bull cross of the 50-day over the 200-day and the 200-day actually moving positive, you would have bought at 180. Now, here's the thing. It seems, you may seem excited to buy Apple at 212 because 220 was the recent high. But if you're doing that, you're ignoring the chart. You're ignoring the reality that we've only had 4 or 5 candles over this 200. Yes, I don't think that it's coming back to 200, but Apple is an incredibly expensive stock right now, and its momentum is super, super hard to get rid of. And it's on a momentum kick right now, but it could trade sideways before it goes up or down again. Just realize July is a super, super seasonally strong month for Apple. I am playing it with TQQQ, but you could play it with Apple as well. This has just, and again, it probably has to do with a lot of the iPhone leaks that come out. And this particular one with iPhone leaks, if they leak that the AI stuff is going to come out on the iPhone 16 is going to have advanced AI features. And it's going to be the first one to actually launch it, and they'll launch it on the 15 later or the 14 later. They may do stuff like that in order to drive an upgrade cycle. They may say the iPhone 15 is just as good as the iPhone 16 as far as the AI features, which may push people to bump up from their 12s and their 13s. I got in the 13 Pro. I am getting the 16. I am getting the 16. I mean, I've already told you, I am not a guy that buys every time. But, Apple, I will buy it. So you've got to keep an eye on that stock chart, and you've got to understand that you don't just buy it into a rally. We'll go over some of the other stuff. Now, Microsoft, Dan Ives, we're raising our price target on Microsoft from 500 to 550. This one, understand, that price target doesn't mean next week it's going to get to 500. Doesn't mean that, over the next 4 months it will get to 500. This one is extended as well. The RSI is at 72. You're overbought. The MACD, the last time the MACD was up here, it turned over and it pushed down. You're seeing a little bit of a button hook. Now, the algorithm makes you 42% in Microsoft. I would argue you just buy and hold. It makes you 63% over 24 months. The algorithm got you in at 426. I would say anything between 400 and 430, you buy the stock. If you don't have, if you don't have exposure to this stock, then as it gets down to 430, you buy the stock. Do you buy it at 440? I don't think so. I think you wait. This is all-time highs. Again, this is all-time highs. So it's hard to recommend these things when you're running into oversold territory and that we've got to have a pullback. There are plenty of good opportunities in the market. Just understand. It's not something you want to back out of because you don't want to get in the way of momentum. If you have exposure to it, continue until it weakens. You're never going to time this thing perfectly. CELH. This is Celsius. I think they're going to have the CEO on lunchtime or something. This is a stock that has just been crap. This is a stock that has pulled back a tremendous amount. Now, we talked about the RSI and the other ones being up towards 100, 70 and 80. This one, the RSI is at 23. The MACD is well below the RSI. But I would argue CELH, this one has had a story change. And it's that Pepsi doesn't, Celsius sees analyst estimates cut after Pepsi reduces its inventory in Q2. This may be one of those GLP type ones where people don't want fake sugar in their drinks and it's just slowing its growth. We don't know. The CEO should have some pretty good outlook on this stuff. Now, do you want to buy this one? I would argue you buy into strength. It's at $58 right now. $51 is your support level right there. I think 50 is your ultimate support. If we get below 50, I think that valuation makes sense to buy it. At some point in time, the valuation makes sense to just buy it. I don't drink this. I am full disclosure. I have Pepsi and Coke in my portfolio. I am probably never adding CELH, but it's a good one to trade. If I see the trading opportunity, I might take it. Right now, doesn't interest me at all. Doesn't interest me at all. Now, RCL, which is an alpha pick, we talked about alpha picks earlier. RCL, which is Royal Caribbean. This has seen a pretty decent pullback. Now, I would argue that the reason for the pullback is that the consumer is weakening. This one has just run up so much. Again, you don't want to get in front of this moving train that's up. And it may have just run too far too fast. You can see the support level was the previous all-time high before the pandemic. 132. We broke through that. We're at 148. I would argue that you just want to be patient with this. You want to find an entry on the algorithm. The algorithm makes you 148%. Buying and holding makes you 193%. Now, your average win is 21%. Where are we from this 129? Right now, today, we're at 14%. You were at 21. If you had gotten out at your average win rate, you would have avoided this big downturn. You can't be greedy with this stuff, and you have to identify, is it a trade or is it something? Again, if you want the 4-hour algorithm, I give it to you when you sign up for TrendSpider. So, you can use these things to your advantage. Now, we'll talk about some scans later, but one that in the banking sector that I wanted to point out is Citigroup. We talked about Citigroup as being one of the best opportunities. Now, you didn't have confirmation here on 62.39. The algorithm makes you 25%. Buying and holding makes you 17%. So it's about the same. We talked about this one, the average win being 8%. That was 4%, and you still had confirmation. The second you lost confirmation, you should have gotten out. And it was a nice 4% gain. The second you lost confirmation, you should have gotten out. We didn't gain confirmation with this buy. You shouldn't have gotten in. The MACD, so far, it's down below the oscillator. The last time this one came down below the oscillator, we got this buy-in at $60. The RSI was about the same territory. It's right now at 36. Again, there's opportunities in this market. You want to find ones that you can trade, but long-term, I would argue your portfolio should still be in tech. Disney, biggest animated movie opening since, I forget which one, but I think it was The Incredibles 2 was the last one. This one's up 1%. It's at 101. I would argue anytime you get Disney below 100, you buy it. What did we see? We saw this when he threw the kitchen sink out and was fighting with Nelson Peltz on the thing. We had this nice gap on earnings. It gapped up on earnings. What happened? We came all the way back. You came all the way back. You filled the gap. Now, are we on our way up? Because this gap down from the last earnings, 116, all the way down to 107, because they couldn't hold up this particular gap up here? I think you will. Again, this is one that I don't think you throw out. I think you just buy this one under 100, and you can sell it over 100 when you get the rally. If we look at the Catalyst Watch, one thing that I want to look at is Catalyst Watch, HP Enterprises event. It's today. Or is it tomorrow? I forget. Let's see. Today, we got Volatility Watch, You got UiPath. You got GameStop, which is continuing. GameStop's just a crazy one. If you don't know, their annual meeting, I think, is later today. They might assign Roaring Kitty a board seat. Might be interesting. All day tomorrow. I'm sorry, it's tomorrow. Hewlett-Packard Enterprises will hold its HPE Discovery event. CEO Antonio Neri will be joined at the Sphere by Jensen Huang of NVIDIA. And that could be a moving stock, because when we talk about NVIDIA, we also have to talk about the suppliers. You've got Dell. Dell is a cross-up on the algorithm today. It has a buy-in. We will look at that chart in a little bit. NVIDIA, you bought down here at 883. You're at 133 right now. It is extraordinarily strong. Now, just understand, just since the last earnings report, NVIDIA is up nearly 40%. Now we continue going up roughly 10% per week just for the next month. If we do that, NVIDIA will be a $4.8 trillion company. It will be the most expensive company, market cap, the largest market cap company in history by July 12th. That's just 2 weeks. We'll be knocking on the door of a $4 trillion market cap. That can't go on. That can't happen. The RSI, the MACD, incredibly high up. Incredibly high up. The RSI, 80. It is overbought. Understand, buying into this rally is something that I personally feel uncomfortable about doing. Am I selling my NVIDIA? No. Am I looking to add to it? Yes, at a reasonable time. You can constantly have these little catalysts like Jensen Huang speaking. And that's the problem that you have. So NVIDIA's annual meeting is June 26th. Just so you know as well, June 26th, they're having their annual meeting. That should be a thing. But Catalyst Watch, if you want to look at more stuff, we've got some earnings and stuff like that. This is a great, it just lays it out so well on Seeking Alpha. Again, if you want Seeking Alpha Premium, It's available on my link tree right here. It's the second one. You get 20% off. You get this nice thing. And this Catalyst watch is something that I read every Friday. I mean, it's got trading opportunities for you for the week. That and alone, I think that Catalyst watch, if you just watch it and then you trade around it, I think you'll pay for your Seeking Alpha subscription, no problem. This shocked me. This was shocking to me. Google, if I told you, hey, there's an IPO for a pizza shop, a delivery pizza, national chain. Hey, there's an IPO for a tech search engine. If I asked you which one would do better, which one would you say? I would have said that the tech engine, 6,976% versus 7,428. Domino's Pizza does better than Google since the IPO. That is crazy. Domino's Pizza was July 2004. Google was August 2004. That is nuts. Again, it's just kind of pointing out to you that there's some craziness here. Now, this was interesting. This was a Vertiv partnership with NVIDIA, and Intel drives opportunities growth. Wait for the pullback. This is an analyst from Seeking Alpha, and they go over MOD, VRT, and SMCI. This is a great article. If you've got any of these stocks, I would urge you to read this article. They are saying, hey, wait for a pullback on VRT. If you didn't know, I bought VRT, a bunch of it on Thursday. Friday it was back down. Today it's back up. I bought it at 93. It's at 91. I bought this $93 because the algorithm told me to, and I believe in the algorithm. But it might be pulling back. It might be pulling back to the 80 mark. What am I going to do? I'm going to buy more. When we talk about opportunities, look at how low the MACD is. It's below the oscillator. The RSI was at 45. The last time the RSI was down this low, you bought at 85. You rode it all the way up to 110. I mean, that's over just, a month? That's a really, really good gain. And when we look at stock charts, when we look at the longer one, we want to see bottom left to upper right. What is VRT? It's a data center cooling technology. Now, SMCI just came out with their cooling. They are cooling in the racks. Vertiv actually cools the entire room. Needs to be forethought and part of the architecture plan. SMCI says, you know what? We're just going to cool the rack. You don't have to do a thing. We'll actually make the rack and cool the system right here. So that's why you're seeing SMCI up. But VRT, same thing. Now they go over another alpha pick, MOD, in that article. MOD is another one that does cooling in data centers, discussing rapid upgrade from small cap to medium cap within a short time span of 1 year. So thermal management, commercial vehicles, automotive, data center markets, along with industrial power generation. That's what MOD does. So again, Seeking Alpha, I think it gives you great ideas. Vertiv is a buy in the quant. I bought it again. ARM, Micron, gain, Bank of America, boost the price target. I think this is just normal. ARM is going through a process right now where they will upgrade some stuff. They're going to up their prices. Both of them, I mean, ARM is not covered in the quant. Micron is a hold. It's just a valuation. If you want to read this article, I think it's interesting. I think the upgrades just come because the stocks have run so much. I honestly think that's the case. Now, if you want a video, Ross goes over GameStop, how he made $319,000 on GameStop over the last week or so, and his strategy. There's two things that Ross basically says in this. And the first is have a strategy. Well, what's the strategy? Well, you could have the strategy of the 4-hour algorithm in TrendSpider. Again, that's a strategy. And it's key to any successful trader. If you get outside of your strategy, that's the second one, is emotions. The actual strategy of the 4-hour algorithm takes emotions out of the trade. So when I was trading VRT, I said, you know what? Let me try it. Let me back test it first off. Let me see what the algorithm actually makes me to make sure that I'm not losing money. If you're losing money in an algorithm, it doesn't make sense to trade the algorithm. Even if you're losing less money than the buy and hold, it still doesn't make sense to lose money. So this algorithm makes me 411% VRT. That's why I listen to it. Now buy and hold makes you 763%. I'm looking for entries. So my strategy on this is just look for entries and buy it. I do think this is a long-term winner. And the valuation's not crazy. The valuation's not nuts. But this is what Ross teaches you. And if you want to trade on his 1-minute candles and stuff like that, he's got a great system. But take the learning from this 47-minute video and apply it to your portfolio management as well. It's all the same. Again, it's all the same. The strategies that they teach you in these short-term trading videos, you can apply to long-term as well. You just extend the timeline on the chart. I like 4 hours. The reason I like 4 hours is because I don't want to do daily because I want a little bit of a jump. I want to take a little bit of a jump off of the algorithms that do daily kind of trading. So I chose 4 hours. Why don't I do like 1 hour? It's because I don't want to get freaking alerts every hour. I get alerts at 12, I think it's 12:30 and 4 o'clock. That's it. I get 2 alerts a day. Say I've got 40 alerts set up, okay? And on TrendSpider, you can set up 30 simultaneous alerts with this lowest platform. Now, when you get to enhanced, you can do 100 alerts. Yeah, but the lowest one, 30. If all of a sudden you've got 30 alerts, say you've got 15 buys, 15 sells, and you get 30 alerts all at once on an hourly, or you have 15 in an hour, and then the next hour you've got 14. That's too much for me to handle. So I like to let the system do the work, but I like it at 4 hours. So that's why I did 4 hours, and it just works. Mark Eldridge, these are social requests. Hi, Gary, longtime listener and love the energy that you always bring to your channels. I wanted to hear your thoughts on WM and PM. WM, is this Williams Management? Waste Management. So Waste Management, I liked it. How do I say this? I think I don't think that this is a stock that you throw out right now. It's just the chart looks ugly. And when you look at the weekly, it doesn't look that ugly. It just looks like, again, when you look at these all-time highs right here at about 175, when you look at that resistance level, we broke through it. And so I would say that we're trading sideways. I would say that when you could probably get this under 200, again, you're at all-time highs. I'm hoping that you're trimming this. It's, look at the MACD and the RSI. It's not crazy. I just, from a long-term standpoint, it's trash. It's trash. It doesn't make sense to me that this is where I'm putting my money in a long-term portfolio. If you want to look at the let's see, momentum. The momentum is a B+. 6-month performance, 15%, 9-month, 1 year, 25%. That's pretty good. You look at NVIDIA, it's up like 125%. Again, is this an AI or is this a GLP-1 trade? I don't know. That's the market that we're in. So I think it's fine. I don't mean to trash it, pardon the pun, but it's just not my thing. Now PM, I will tell you, Philip Morris, I'm just wholeheartedly against cigarettes. The fact that they lied for years, I don't think that forgives them. So I wouldn't hold it as a long-term one. When you look at Philip Morris here, why do you want to hold on to this from a long-term standpoint? This goes all the way back to 2019. We're in a GLP and an AI market. Why are you holding on to this for long-term? If I go back to 2019 and I just had went from 87 to 100, great look. But what's pushing this one higher? Is it because more people are going to smoke? I don't think so. Or are we seeing an inflection of long-term stuff? So Mark, I would worry a little bit about that one. Again, I don't know what you have in your portfolio. Long-term holdings, neither one of them gets me super excited. But again, that's me. If you have some type of information about waste management, I have seen videos when they do the waste management golf tournament out in Phoenix about how good the profitability of waste is. So I don't know. Maybe it's a good one. I just, it's not my thing. William Morgan. Hi, Gary. Thanks as always. In your experience, what are the amounts that separate small, medium, large portfolios? I.e., when you say large enough for TrendSpider, what approximate amount are you thinking? Great question, William. I will tell you. So if I were to go back, I didn't have TrendSpider until I had a 7-figure portfolio. I used free tools. But you don't need a 7-figure portfolio to actually get TrendSpider. I wish I had things like this earlier. I wish TrendSpider didn't exist until 2018, 2017, somewhere in that neighborhood. I wish I had access to this stuff earlier. But I will tell you, the least amount that I would have is $25,000 in a brokerage account. And the reason I say $25,000 in a brokerage account is because you can't trade. So for instance, say you have $20,000 in your portfolio account and you want to trade. I would probably use a free service like Webull. Webull, you can sign up for Webull here at the link tree. It's the 4th one. And Webull gets you 75 free stocks. They have a desktop software. And so I think that's a better one for you if you have under $25,000 in a brokerage. Now, if you want to trade your retirement account, I don't know if the reason $25,000, by the way, it's called the PDT rule. And you can Google this. It's called the pattern day trading rule, PDT. Polydeterminant trend. I don't know what it is, but it's pattern day trading rule. And that the government is protecting you. BS. They don't want market manipulation by smaller accounts. That's all it is. But they say it's to protect you. F you, SEC. But yeah, it's $25,000. It limits you to, I think, 4 trades a week. It identifies you as a pattern day trader and then suspends your account. So you will get stuck in trades. So understand, that's the way you do it. You can do options, I think, is unlimited, but it's a pattern day trade rule. And I don't know the whole laws about it. It's been a while since I had less than $25,000. I do have a small account in Webull, but I don't trade in there more than 4 times a week. So, I do some options in there every now and then when Edward, the options oracle tells me, hey, this is a great trade. I think I've done 2 or 3 of those in that thing. Or I did some options with TQQQ last year. But I am not an options guy. I don't understand it. I don't know how the hell I made money on it, but I did. It was what it was. But TrendSpider, all TrendSpider is you have to learn the charting. So I would urge you to first learn charting. If charting's not your thing and looking at the charts is just not exciting to you, TrendSpider makes no sense. Why are you paying $500, $600 for something that you're not going to use? So you've got to understand, if you're going to use it, go and get a free trading a charting program. Fidelity has Active Trader Pro. Schwab, I believe, has something. I don't know what it's called. Thinkorswim from Morgan Stanley. You've got E-Trade has their platform, but it's all out there. It's all free to use. It just doesn't have the bells and whistles that TrendSpider has. Think of it as, you're riding one of those city bikes versus TrendSpider is a triathlon bike. That's what it is. So, but great question. I would say $25,000 in a brokerage account is probably the least, just so you can trade on it. But again, if you want to manage your portfolio with it, I'd say about $10,000 would probably make up that amount. But again, if you're paying $500 for a year, that's 5% of your total portfolio at $10,000. So I don't know if it makes sense. Peter from email. Hi, Gary. One of Cress's July picks was SUN, Sunoco, in the 4-hour. Let me look at this one. So Steve Kress is from Seeking Alpha, and he posted July picks, and SUN was one of those. It looks very oversold. There's a recent insider buying, and MACD looks like it could be setting up for a cross-up. Could you take a look? So here's the 4-hour has you out on Friday with a nice 2% gain. The 4-hour, the algorithm actually loses you 3% versus buying and holding makes you 22%. So I would argue that the algorithm probably, if it wanted to trade this one, probably not great. And you can see it's just trading sideways. It does have bottom left, upper right. But you've seen this major pullback here from March 18th, where you were at 62 and now you're at 52. Now, it's only at the 50-day, and the last few times we've gotten below the 50-day, that means that it's due for a pop-up. So I would look at the 4-hour, and I would say, hey, the 50-day, we just had this death cross here, April 17th. The stock was trading at that death cross at about 54. My guess is that 50, closer to 50, would probably be a better buy here. The RSI's in no man's land at 50. The MACD crossing kind of down. This is energy. Excuse me. And energy is one of those that just has not been loved. I mean, energy is just, It's a super strong buy in the quant. You can look at the revisions. Let's see, revisions, 4 up, 0 down, 3 up, 1 down on revenue. If we look at summary again, is there anything? I mean, growth just seems, the profit and revenue year over year, you're down 10%. Oil company is down 10%. Profitability, 6% margin versus the sector median at 4%. I don't know why it's, the number one other than valuation. I mean, they're not making money, but they're expected to make money. So when you do see something like this and they start to make money, you could probably expect a bounce. But where's that actual bounce? I don't know. And the weekly chart just doesn't look solid to me. I think there's better opportunities, but that 200 days still moving positive. The 50 days moving positive. You're under that 50-day. And at some point in time, you probably do get a bounce. But I would argue this, and think big picture, Peter. The one thing that triggers inflation and deflation is oil. And it's the one thing that the administration can actually manipulate, meaning they could release the SPR, the Strategic Petroleum Reservoir, whatever it is. They could release that, and they could lower gas prices immediately. They could do something to the point of, hey, we're going to turn on the spigot and pump more oil, even though we're pumping more oil than ever before. They could, just do a crazy buy or manipulate Saudi to actually release more barrels on an emergency basis. It's the one thing that I worry about getting manipulated. And that's the problem that I have with doing energy long term. That's why I say, hey, stick to the big ones, which are Exxon and Chevron. But I don't think this one, Steve may be right. This one may see a big bump. I mean, let's look at, one of the things that you really want to look at. Let's look at the seasonality of July with Sunoco. Sunoco seasonality, 100% win in July. Mean change of 6.23. So that's over 9 years. If we go back even further, let's see. It's one of the biggest wins. Let's go back to 2012 when this one started. Yeah, it's the best month. So I don't know that it necessarily makes sense for me, a big tech investor, to take the chance on this one. I'd rather take the chance on QQQ having 100% in there. But, I can't argue with Steve. I mean, the stats are the stats. So he likes it. I mean, he's a fundamental guy. He sees something a little bit different than I do. But the chart to me looks a little bit messy, but an opportunity might be there. So scans. These are ones that show bullish tendencies in the 4-hour algorithm. First one is Dell. Now, I've talked about Dell being an opportunity that I think is pulling back and probably taking off. We're at 140. You're up 5% today. Up 5%. Algorithm got you in at 133. We talked about this one last week. 133 was the buy. We talked about the MACD being low. We talked about the RSI being low. If you bought at 133, you're up at 140. Great play. Great play. Google had a recent, I think GOOGL, which I do own a portion of, and it's a legacy buy. I don't buy GOOGL anymore. I buy GOOG because when Google actually buys back stock, they buy GOOG. GOOGL just has the voting rights, but with Larry and Sergey owning the stock, you're never going to get a voting right anyway. So Google right here, it has a cross up at 178. You can see the MACD is just kind of capitulating. The RSI just going up and down. Nothing crazy. Bollinger Bands cinching up. They've been cinched up for a little while. It may just go for another run. It's not crazy to think that we could see another run. I think we might see a pullback, and I think you might see probably about 165, 160. But if you don't have exposure to Google, just get Google. That's my now one that I do like. That just they fired a dozen workers for the little mouse manipulation because they were working from home and they had some of these software programs that actually moved the mouse. This is an interesting one. We talked about Citibank being probably the best, one of the best opportunities in banks last week. Wells Fargo, I own it. And I was pounding the table when it was under 40. I said, you want to buy this under 40 because I think right back here, this was not long ago. That was November 2023, less than a year ago at 39. You went all the way up to 62. Okay, you're at 57 right now. Buy in at 57.41. You do not have confirmation. I would wait for confirmation. Do I want to buy this at 57.41 where the 50 days moving a little negative? You're not above the 9-day. The 200 days still moving positive. Is this going to use the 200-day as support? We will find out in the future candles. I don't think you're going from 57 to 61 today without some type of major catalyst. Your earnings are coming up in July 11th. So you've got time. Now, the algorithm makes you 64%. Buying and holding makes you 30%. So this one makes sense to trade on the algorithm. Wells Fargo is one. Another one that's a big company is Cisco, CSCO. I do think that this company is a $55 company, but it's at 45. And do we want to buy it? No, you don't have confirmation. Now, this one at 46 made sense to buy because you had confirmation, but you quickly lost it. And when you lost it, you want to get out. I don't care if you're losing. If you're trading this one, you want to get out. Now, long term, Cisco's a little bit of a difficult one because I do think that 45 is a good buy, but you're on the underside of the 9-day. You don't have confirmation. Now, you could say that the death cross happened. It used the 200-day as its resistance. And so if you buy at 45, your absolute top right now would be 48. That would be where you would top out at. Does it make sense to buy it? I don't think so. But it's an interesting opportunity. If we go to the weekly and we look at the weekly, you're seeing it's just weak. The 50 days just started to move negative. So you've got to take a look at these charts, understand where you're trading, understand what you're doing. So if you have any questions, you can hit me up. We do have Lennar earnings after the bell today. Lennar might be an interesting one. Their earnings per share, they're expected. I mean, it's big. They reported $2.50 last time. They're expected $3.24. Housing has just been a bad one of recent. We got Accenture and Kroger on Thursday and Darden. The stock market is closed on Wednesday, by the way, just so you know. So I won't have a podcast on Wednesday. But Cisco, anything that you want. Again, if you have any questions, they're all at the link tree. I've got my Substack. You can sign up for the newsletter. It is completely free during the week. The weekend just has, if you want the paid newsletter and you have problems paying the price for it, email me. We can work something out. I can get you something. I can get you access to something. It comes with a free 7-day trial. I just look at it as a way to support me. So, and I do think they provide some good opportunities because if you've watched the paid newsletter, you can obviously see that you're making money. So if you have any questions, hit me up. Okay, take care. Bye. I think it's about a 50-minute recording. Okay, let's see. It's 9:46. Okay, let's see. I got to give them a call. Is the market up or down? I don't even know. Qs are flat. My portfolio. Ooh, God, it's hot in here. I'm up 0.15. Everything else is the indexes are negative. I'm up 0.15. I'll take it. Yeah. Okay, and with that, I got to go edit this mofo. Hopefully people join. I will talk to you guys